It is important to keep your money safe, whether it is in a bank or a digital wallet like Trust Wallet. In this video, there are some tips on how to keep your money out of the bank or in Trust Wallet. So in this video, we are going to discuss keep your money out of the bank or in Trust Wallet. The video is going to be amazing. Make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. Keeping money in a bank may not be the best option for several reasons. Firstly, high-yield savings accounts are not the best way to grow your wealth long-term, as the rate of inflation can be higher than the yield. Secondly, some people keep money at home because they are naturally risk-averse and feel that the stock market is too volatile, or they distrust the banking system. Thirdly, using an additional bank account can be useful as it's possible to get a better interest rate by shopping around, and it will benefit financially in the long run. Lastly, while savings accounts, money market accounts and CDs are some of the safest places to keep your money as they are insured, they may not offer high returns on investment. Therefore, it is important to consider all options before deciding where to keep your money. Understand the risks and benefits. Keeping your money out of the bank or in a wallet like Trust Wallet has both risks and benefits. Some potential benefits of keeping your money in a wallet include greater control over your funds, lower fees, and the ability to participate in decentralized finance platforms. Decentralized finance is an emerging financial technology that challenges the current centralized banking system. Eliminates the fees that banks and other financial companies charge by using blockchain technology to create a decentralized open-source network for financial transactions. DeFi, people to send, purchase, and exchange financial assets without relying on banks, brokerages, or exchanges. It is a utopian vision of a financial system that operates without a central authority and instead relies on smart contracts and other blockchain-based technologies. It is important to note that DeFi platforms may not have the same level of insurance or decentralization as they claim, so it is important to carefully consider the risks before participating in DeFi. However, there are also risks associated with keeping your money outside of a bank, such as lack of deposit insurance and increased exposure to fraud or hacking attempts. It is important to carefully consider these factors before deciding where to keep your money. Additionally, banks have industry-standard security technology that can help protect your accounts, while DeFi platforms may not have the same level of insurance or decentralization as they claim. Before deciding whether to keep your money in a bank or Trust Wallet, it is important to understand the risks and benefits of each option. Banks are generally considered safer because they are insured by the government, but they may charge fees and have limited access to your funds. On the other hand, Trust Wallet is a decentralized wallet that allows you to store multiple cryptocurrencies and provides more control over your funds. Choose a secure digital wallet. If you decide to use Trust Wallet, make sure you choose a secure digital wallet that has strong security features such as two-factor authentication and biometric login options. You should also make sure that the wallet supports the cryptocurrencies you want to store. Trust Wallet is a secure digital wallet that can be used to keep your money out of the bank. Trust Wallet is a non-custodial wallet that supports 40 blockchain networks and more than 160K plus different assets. Only you have access to your private keys, making it one of the most secure crypto storage options in the market. Trust Wallet provides instructions on how to secure your wallet, including writing down your recovery phrase and adding a passcode to your wallet. Other popular digital wallets include Apple Pay, Google Pay, Samsung Pay, PayPal, and Venmo, but they may not offer the same level of security as Trust Wallet. It is important to research and compare different digital wallets before choosing one to ensure that it meets your needs for security and functionality. Keep your private keys safe. One of the most important things you can do when using Trust Wallet is to keep your private keys safe. Your private keys are used to access your funds, so if someone else gets hold of them, they can steal your money. Make sure you store your private keys in a secure location, such as encrypted USB drive or paper wallet. Keeping your private keys safe is crucial when keeping your money out of the bank or in Trust Wallet. Private keys are like passwords that safeguard your Trust Wallet account, and they are ideally the only way to access your funds. Here are some best practices for storing your recovery phrase and securing your Trust Wallet. Write down your 12-word recovery phrase on multiple pieces of paper and store them in different secure areas. Use a hardware wallet like Ledger to ensure ownership and full control over your assets. Enable app lock, input a passcode, set auto lock time, and enable Touch ID or Face ID to unlock your wallet. You can also store your recovery phrase inside a password manager or use CryptoCat for more durable storage. It is important to be aware of phishing attempts and always be cautious when entering sensitive information into any device or platform. Use multi-signature authentication. Another way to increase security when using Trust Wallet is by using multi-signature authentication. This means that multiple people need to sign off on transactions before they can be completed, which makes it much harder for hackers to steal your funds. Multi-signature authentication is a security feature that can be used to keep your money out of the bank or in Trust Wallet. Multi-signature wallets require 2 or more private keys to sign and send a transaction, making it more difficult for unauthorized users to access your funds. Trust Wallet does not currently support multi-signature wallets, but it does offer other security features such as app lock, passcode input, auto lock time settings, and Touch ID or Face ID unlock options. To create a new wallet in Trust Wallet, you can launch the app and select Create a New Wallet from the home screen. You will then need to accept the terms of usage to proceed. While multi-signature authentication is not currently available in Trust Wallet, it is still important to use strong passwords and enable all available security features to protect your funds. Multi-signature authentication is a security feature used in cryptocurrency wallets that requires 2 or more private keys to sign and send a transaction. This type of digital signature makes it possible for multiple users to sign documents as a group, and co-owners and signatories to a shared multi-signature wallet are known as co-paiders. Multi-signature wallets can be used by multiple key holders or one user across multiple devices, and they require at least 2 private keys to sign a transaction. Imagine a secure locker with 2 locks and 2 keys held by 2 parties that can only be opened if both provide their keys, thus ensuring that one party is not able to open the locker without the other's permission. The multi-signature requirement adds another layer of security to wallet transactions by ensuring that multiple key holders remain accountable to one another. Withdraw money safely. If you need to withdraw money from Trust Wallet, there are several ways you can do this safely. One option is to swap your crypto assets for Bitcoin or Ethereum, and then send these coins to an exchange like Binance, where you can cash out for fiat currency. Another option is to use one of the many peer-to-peer marketplaces, where you can sell cryptocurrency directly for cash. Withdrawing money safely when keeping your money out of the bank or in Trust Wallet requires taking certain precautions. If you choose to keep your money in a bank, make sure it is insured by the FDIC Currency UA, which nearly all U.S. banks and credit unions participate in. You can also open multiple accounts at different banks to ensure all of your money is safe in the unlikely event that one bank collapses. If you choose to keep your money in Trust Wallet, make sure to use strong passwords and enable all available security features such as app lock, passcode input, auto lock time settings, and Touch ID or Face ID unlock options. When withdrawing money from a bank account or transferring funds from Trust Wallet, be sure to follow the proper procedures and use secure methods such as bank transfers. It is important to always be cautious when entering sensitive information into any device or platform and beware of phishing attempts. Keeping your money out of the bank or in Trust Wallet requires careful consideration of risks and benefits, as well as taking necessary precautions such as choosing a secure digital wallet, keeping private keys safe, using multi-signature authentication, and withdrawing money safely. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.